Good morning, everybody. Hey, welcome to Tuesday, June 16th. I hope that your day is off to a great start. You know, yesterday we saw a huge reversal. Dave and I will talk about what caused that and why we're seeing that as we get ready to look at today. And it looks like at least a pretty green day this morning as we get started. Stay tuned as we get ready to have our conversation with Dave here in just a moment.
Well, I started out yesterday morning saying it was an atrocious week last week. It was going to start out atrociously. Everything was El Stinko on Wall Street, and then dag nab, what a change. Let's check in and find out where your money's going this morning after a big turn on Wall Street yesterday. If you didn't hear the news, let's quantify it with the help from Phillip Statler down at Statler Financial Services in downtown Sebring. Phillip, boy, what a U-turn yesterday morning, huh?
It really was, Dave. I mean, you know, it gradually kept getting less red, and then all of a sudden, towards the last of trading, about the last hour and a half, maybe 2 hours, it went green and with pure force there at the end to finish it in pretty good green territory. And so it's interesting to say, okay, why? What was the big turnaround? Well, one of the things that came out yesterday, to me, as somebody in the financial industry, it's a little scary, though. The Fed has now decided they're going to start buying not a bond ETF like they were doing before. They're going to start buying individual bonds, corporate bonds out there in the marketplace to help prop up the market going forward, which is just a little scary to me, Dave.
It is me too on general principle. To flesh everything out for folks, the Federal Reserve announced a few months ago that they were going to be buying corporate bonds, but they've been doing it in market baskets of bonds, ETFs they're called, exchange traded funds, full of corporate bonds. Yesterday they said they were going to pick individual bonds, and at this point in time, we're going to have the Federal Reserve basically deciding which companies are worth investing in and which ones aren't by the fact that they aren't buying those bonds. And while, yeah, the economy needs a boost and the companies that are under duress really need the liquidity, that's good. On its face, though, it makes folks like Phillip and me a little bit on the nervous side because now you've got the federal government deciding which companies are worth saving and which ones aren't. I wonder if they're going to buy Hertz. What do you think?
Yeah, I tell you, there's enough suckers out there buying that stock right now. I'm telling you, that one's a whole scary deal.
Uh-huh. Yeah, that net result was that made Wall Street start the turn, and they went straight up. 157 points up on the Dow yesterday. Sounds like a quote-unquote normal day in today's volatile world. But when you consider the fact that's over 1,000 points better than we started out the day, it kind of makes you sit up and take notice, doesn't it?
Yeah, it really does. You know, that's one of those things that was a major turnaround. And so, you know, I get excited about what we see happening in the marketplace right now, but, you know, could the opposite happen sometimes? And it can. Don't get me wrong, it can. It doesn't look like it will today based on where we're going. But you know, that's the thing is that nobody controls the markets, right? They free flow. All you can control is the amount of risk that you have in your portfolio, and that's important that you do that.
And it does need to be kept in mind, too, that the Federal Reserve buying these corporate bonds, it's a temporary program. At some point, 1 year, 2 year, 3 year, 6 months, don't know. They're going to say, we've had enough of that. I think it's about time to sell all those bonds off. And what's going to happen to those companies that now all of a sudden their debt is being put out on the open market in droves? There's going to be an adjustment of the stock market, and we're going to hope the Federal Reserve's timing is at a time where it doesn't go to do any damage. But then again, we're talking government here, and the Federal Reserve is not known for the best timing on the face of the earth historically.
Well, that's true, and let's hope that at least to the betterment of the government, that they at least maybe make a little profit on that deal too, to help offset some of the deficit that we're incurring.
Well, yeah, that's another part. Let's not lose money on this bargain. Again, purists like you and me look at it and say, okay, fine. We need the stimulus. But if you all remember way back during the George W. Bush years, there was a proposal to have the Social Security Trust Fund start buying individual equities as well and buying the stock market. And at that point in time, a whole bunch of us back then were saying, whoa, wait a minute. That's an awful lot of money to start pouring into the stock market, and having the government picking the winners and the losers is not necessarily a comfortable feeling. We don't call that a system of government that they necessarily feel good about. Well, bonds, the same reservation exists, so we're hoping it's going to be a short-term thing. For the moment, I like what it's doing to my stocks, though, don't you?
Oh, definitely. I mean, we're seeing a big run-up. The question is this, we talked yesterday about the V's, right? The V up, the V down, the V up. So is this just another V up before we see another V down? Nobody knows. But my opinion, it could be. It's a good possibility that we'll still see another downturn once this little new thing pops out and people finally see it for what it is. There'll be some changes in portfolios and stuff like that.
Yeah, let's put it on the optimistic tone for this thing. Let's say last week was a legitimate test of the bottom, and we established a new bottom that was a lot better than it was in March. Once again, we always test the bottom a couple of times before we get back into a bull market. And, if last week was a bottom test, well, we're going to go back down there again at least once and find out whether it really is a bottom, aren't we?
That's right, and see if that will hold us up or if we keep going down back closer to where it was in March. And that's the key. We still have industries that are hurting right now. The whole travel industry, cruise lines aren't back up and running hardly at all right now. You still have airlines that are, not running at full capacity. Hotels still aren't, having the same room nights that they had before. So there's a whole industry sector there that is not bouncing back. And then on top of that, you've got the whole, do you call it a second wave or is it a continuation of the first wave of the coronavirus that's just now perking its head back up? There's a lot of stuff out there for folks to digest. Right now, they're digesting the numbers and they think it's good. And so we're seeing a big pop this morning.
Absolutely. It does have to be reminded the thing that tanked us down last week to that new low, if that's what it was concern over the increase in cases in the virus, and they continue to increase. We'll find out whether or not that's manageable as time goes on. Other stuff happening, and another thing that boosted the market up yesterday, word came out of the Trump administration that the president is softening his stand on another stimulus package, this one including infrastructure repairs, something that basically everybody agrees is needed. How it gets distributed is going to make a difference, but just knowing that the administration was opening the door to discussion certainly didn't hurt the futures one little bit, did it?
No, it really didn't. And we're talking about a pretty good sized chunk of cash here. We're talking about $1 trillion budget for infrastructure. Not going to be wrong. We need it. I mean, I've been down our highways, and there's a lot of highways that need a lot of help across this country. And I would say that maybe it's a little behind schedule. We should have done this way back when, but it's a good thing. It's now forefront. Maybe that will be something they do start to do, is to dump money into infrastructure, which will be construction contracts, which will employ people to get those things done. So hopefully that will be a benefit if and when they can come to an agreement to start that process.
Absolutely. And just for all of us that were around 20 years ago, may we never hear the word shovel ready in the process of this discussion, right?
Exactly, because we're still waiting on those shovels, aren't we?
Yeah, they never did show up back during the Great Recession. Other events likely to happen to us this day will be Chairman Powell from the Fed due to make his regular visit up to Capitol Hill and get grilled by Congress and the Senate. This one they're actually looking forward to, because if there's ever been a Federal Reserve chairman that's shown to be a dove as far as economic stimulus, Powell is starting to sound like about the most left-wing Democrat I've ever heard in that position. How about you?
Well, definitely he is letting the floodgates open, and he is pushing it out as fast as he can to keep this thing going. And we continue, we're about to get lost in all the upward movement of the market, Dave, and forget one of the big numbers that came out today. Yep. Retail sales.
Monster.
monster retail sales. I mean, they were expected to come in at 8.2% increase month over month. Now, remember, last month we had like a 16% decline. This month, we saw a 17.7% increase in retail sales. That's the biggest increase we've ever seen since they've kept records.
That was the number I didn't hear. The 17.7 darn near made me drop my false teeth. But that's the biggest increase ever on record, huh?
Ever on record. And when that came out, we saw the futures. Believe me, the futures were already up. But they took another significant leg up when those numbers came out.
Not surprising on that. Yeah, we actually gained last month more than the percentage we lost the month before, which says pent-up demand really had an impact, didn't it?
It really did. People were so tired of staying home, they had to go out and spend some money doing something, and shopping was it.
And even if it was just going out for a brewski, we spent money like drunken sailors last month, without a doubt. That's good news for the economy, don't get me wrong. We did have one report come out, three as a matter of fact, that impact the market a little bit too, partially because one of them is a big home builder. I gather Lennar put out their report today, huh?
They did, and they did well for the quarter. They beat by well over 55 cents a share. The revenue also came in ahead of forecast. Their full-year home deliveries is above what the analysts thought they would be right now. They seem to be doing well. They are actually trading up. Get this number. They closed up yesterday 7%, and they're up another 2.5% this morning.
Wowzers. Everything's coming up roses this morning. I got one more that gives us an indication on direction.
Well, I don't have actual earnings, but let's talk about 10-year factory outlets. 72% of their occupied stores were open this last Sunday. And they say that their weekly traffic exceeded 90% of the prior year level at the same week. So some good news there for retail. I mean, that's Tangier is actually up almost 17% this morning.
Cool. Let's hope they were wearing masks, because the last thing in the world we need is a break out of the bug from a retail orgy, right?
Exactly. So that's kind of where we're at. So we got another bankruptcy coming up. Chesapeake Energy has secured a $900 million debtor in possession financing credit line, and they expect that will happen sometime this week.
And that's something that we've almost been hearing about now for over a year. Chesapeake's been in trouble, haven't they?
Yeah, they really have.
Yeah, about that. It's almost at about time. It's not unexpected, I guess. Resetting the table this morning, big time up yesterday, especially relative to how low we started out. Dow up 157, NASDAQ up by over 137, Standard & Poor's up by over 28. And when you consider how far down we were when we started the day, that was a banner day. 45 minutes before we open up this morning, Phillip, we've kind of alluded to it. Looks like the party's continuing, doesn't it?
It really is. We got a major upside this morning. We've got the Dow up 3.3%, back up to 26,531. So it's good things happening there. We see the S&P 500 up 2.6%, and we see the NASDAQ up right at 2% this morning also. Then we look at some of the commodity side. We look at gold and silver. Silver's up 1.1%, gold's up about 0.5%, and we look at that crude oil is up 3.5% to $38.40 a barrel right now.
Back up to a little healthier level on the price there. Overseas markets, everybody's up, and they're partying based on our successes. Asian markets closed way up. The Japanese markets almost by 5% when they closed this morning. It was that good. Europe is trading all their major markets up over 3% midway through their day as well. Phillip, it's a great time to be alive if you look at it from a snapshot, but there's always risk out there as well. We're cheering for a recovery, but there could be bumps in the road. That takes good, solid financial advice. How do I find you to get that advice?
You know, we've seen a lot of ups and downs, Dave, and that's why it's important to know how much risk you have in your portfolio. That's why we developed our financial X-ray to analyze portfolios. To schedule yours, give us a call, 863-382-0000. 0037. Hey, follow us on Facebook, Statler Financial Services, where you'll see a rebroadcast of this same show with Dave every day. And then join us for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on Highlands News Talk, 7:30 a.m.
All righty. Look forward to that, and we'll look forward to talking tomorrow. Let's hope we can keep this green ink going one more day, Phillip.
Absolutely, man. You have a great day. I'll talk to you tomorrow.
Take care, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, everybody. Again, I want to remind you that the one thing you can control is the risk in your portfolio. We can't control what the markets do. You can't control what the markets do. But you can control how much risk you have in your portfolio. Call us. Schedule your no-obligation financial x-ray, 863-382-0037. I look forward to speaking to you soon. Have a great day, and I'll talk to you again tomorrow.